Andrew Bell here. Nice to be with you again, and certainly lots been happening since I was with you just a fortnight ago. First up was the 0.25% drop in interest rates. Whilst the Reserve Bank is pleased about many aspects of our economy at present, such as the GDP, which is growing at 3% per annum, driven by improving household consumption and population growth. They're also pleased about the pickup in the resources and services exports, and also very pleased about the drop in unemployment to 5.7%, which is reflecting increased demand for labour. They've been frustrated that the Australian dollar hasn't been falling. In fact, it's been rising, and ultimately a drop in interest rate was seen as essential to get that Australian dollar down. Now, there's no doubt that if they don't get the fall they're looking for, or if the Australian dollar doesn't stay down, there'll be another interest rate drop in the wind. But it is a real juggling act for the Reserve Bank, because the latest NAB business survey for the first quarter of 2016 shows that business conditions are in fact improving, and expectations about the future have also jumped. It was with all of this as a backdrop that the budget was handed down. A bit of a nothing budget, everybody says, but I just don't know why governments, and particularly treasurers, can't call it for what it is. They talk about winners and losers in a budget. Well, this is bigger than the individual. Of course, every government would love to be able to give more handouts and increase pensions and more money for social programs and to build more roads and football stadiums and so on. However, we all know that we have this substantial debt fueled by years and years of deficits, and that has to be addressed. We all know that as private citizens, that if our credit card debt is too high, then we have to pull our heads in. Stop spending. Don't go out on this year's holiday. Don't go out to dinner as often, and so on and so on. Stay at home and stop spending to get that debt paid off. Well, it's no different for governments. And as soon as someone can explain it effectively to all of us citizens of Australia, we'll get it. Get rid of the debt first, and then we can use that money we pay in interest and any surpluses to expand sensible government spending. Then, last weekend, the announcement of a double dissolution general election, with the election date being the 2nd of July. I'm sure we're all cringing with the thought of an 8-week election campaign. I'm already sick of the TV commercials. For all of those interested in real estate, one of the features of this election will be the decision around negative gearing. Now, it's been a key platform throughout the Australian real estate market for more than 40 years. Back in the early 1980s, when I was in business at that time, the then government terminated negative gearing. However, very strong lessons were learnt, where in particular, tenants were dramatically affected by a shortage of rental properties and rapidly rising rents. As a consequence, negative gearing was turned back on again very quickly. What concerns me about the latest proposal is that they're suggesting negative gearing be eliminated for resale properties and only be maintained for brand new developer stock. This is going to have a massive social impact. Most of the new developments are in our outer suburbs of our cities, meaning we will force tenants to have to move to these outer areas where quite probably there will be little employment opportunity. For tenants who choose to live close to the city or the inner city itself, they'll be increasingly finding a diminishing amount of property available to rent. And those rental properties that do exist will be able to command ever-increasing higher rents. It's going to be a massive social impact, but I don't believe it's been well thought out. The other concern is to tourism. In markets such as the Gold Coast, Sunshine Coast, Cairns, and indeed other markets like Port Macquarie and so on, it will mean increasingly less properties bought that can be used for holiday letting. And so important markets of Australia, where the average Australian goes for a holiday, they'll find it difficult to find an apartment or a holiday home for themselves and their extended families, and will have to purely rely on hotel accommodation, which is not the type of accommodation most people want when they're coming for an extended holiday. This will just drive hotel rates up as well. Now, either of those 2 points I've raised are just two of the significant points, other than the fact that it will mean less people will buy properties, and so there'll be less rental accommodation around. And that shortage will just continue to drive rents up. And those people who do buy in the outer locations, they're going to find that they're buying in developments which are largely fully tenant occupied. And that's not healthy. We should always have a balance between owner-occupied and tenants. Otherwise, we run the risk of creating ghettos in our outer suburbs. As I say, it's going to be a long 8 weeks to see all the shifts in opinion polls and see where the two parties end up. It's now currently neck and neck. Well, I'll see you in a fortnight's time and we'll see how things go.